So, begs the question. Many investors are asking, is the S&P 500 even relevant from a benchmark or investment perspective? Let's see why they're asking this question. Well, if you buy 500 stocks, the largest 500 companies in the US, makes sense. You should have a pretty good return. The problem is the top 10 names represent 37.3%. That means for every $100 you put in the S&P 500, almost $40 of that goes to the top 10 names, and the other 493 names, 503 minus 10, you basically gets the other $60. So again, you think you're diversified, but you're really kind of not. So what do I mean by that? Let's look at real facts. If we go to the S&P Global, that's the editor of the S&P 500, Standard & Poor's. Top 10 names, here they are. Apple, 7.6%. NVIDIA, 6.6%, on and on and on. So if you're an investor, a balanced investor, and you have a 10% cap on information technology, well, you're good through your cap basically at 1.5 the weight of the index. So you're going to lag no matter what. Either you have less weighting in all of these names, or you have to pick and choose your names. And the performance is not that uniform. Microsoft did 12%, while NVIDIA did 171. Since 2020, NVIDIA is up 1,600%. Where the rest of these stocks are anywhere up by 6 times to basically double in the case of Berkshire Hathaway. And a third of the performance of past 4 really came in this year. So very lumpy returns. And I want to take your attention here to information technology and how basically we would consider all of these names technology names, save for Berkshire Hathaway. However, Standard & Poor's feels that Alphabet, even though we would see that as a tech name and a lot of their revenue does come from technology-based activities, they consider that communication services, say like a cable provider or a cellular provider. The same thing goes for consumer discretionary. What does that mean? Well, consumer discretionary typically would be car makers or other tools, perhaps a washing machine maker, that sort of thing. Well, no. Amazon, even though Amazon and Tesla, really their revenues are largely, in the case of Amazon, certainly is the case, largely tech-based. There's a challenge there where the index editor tagged them as non-tech based. But why does that matter? Well, let's have a look. The S&P 500, 33% of the weight is technology, but then as I illustrated, you can add consumer discretionary, where Amazon and Tesla make up 20% of that index. So that's 2%. So you could add 2% and move it over to information technology and communication services. That includes Alphabet, Meta, and Netflix. Again, largely weighted by those 3 names. So, and we could argue that make the argument, a good one, that those are really tech names as well. So the challenge as a money manager, you end up with basic technology being close to 50% of the index. And remember, most risk managers will cap it at 10 or 15%.